Good evening, everybody. I've been getting a lot of feedback recently that somehow the information doesn't fit all together on when we're analyzing stuff, and I realized just because a lot of new people that have come in, we've kind of skipped over the basics. And the basics, again, is your ABCs, the 12 major signals. So we're going to start doing a little bit of a retraining, or at least doing a basic teaching of how the signals work. So the basics boil down to that using candlestick signals is a function of 400 years of Japanese race traders identifying signals and patterns. And that aspect by itself puts you into a different realm as far as technical analysis. It's not what the fundamentals are doing. It's not what support and resistance levels are doing. We have the advantage of seeing exactly what's going on in investor sentiment at every place else that everybody else is watching. So what we're going to do over the next few weeks is we're going to go back to the basics. Now, that doesn't mean we're going to get dreary and boring. There's still lots of elements that we can put into our chart analysis by knowing what each signal and pattern is telling us. So again, the 12 major signals came from my learning candlesticks when there was nobody else out there that knew much about candlesticks at the time. Had some very antiquated information, but I wanted to learn everything that was going to make me money. So there was about 50 or 60 signals out there, and I wanted to learn them all. So what I would do is I'd go back through old charts and see where the tops and bottoms were and what signals were there. And if I didn't recognize them, I went back to my chart guide at that point to see what type of signal I was looking at. Well, over the first couple of years of doing this, it got down to the point that 99.9% of the time, I was looking at one of these signals. So it dawned on me that instead of trying to spend my mental time and energy learning all 50 or 60 of them, that if I learned these, I would have more trades and more clarity as far as what was happening in a price move or a reversal than anybody else using any other technical analysis. So I always start off with that before candlesticks came along, I was the worst investor in the world. I was your typical buy the rumor. I was always the one getting in at the top and panic selling at the bottom. And I gave up on investing. I was a stockbroker for 8 years, and I realized, shoot, there was, and I can remember, kind of reminiscing here. No, I'm not being modest, Fred. I was the worst investor in the world. I can remember working with Oppenheimer at the time, and I would sit there and think, there's all these trade situations out there. How do I go find which ones are going to work? Obviously, the research departments aren't any good. They don't know what makes the prices go up or down. I said, nah, this is just too tough. I'm getting out of the business. And a few years later, somebody dropped candlesticks on my desk, and my first impression when I looked at it was, this makes sense. And the more I looked at it, the more sense it made. So what we're going to do is we're going to kind of go through and just go back to the very basics of starting with the doji tonight. We'll just do a few minutes of this and then go on to our regular session. But a doji is basically showing us where the indecision between the bulls and the bears are represented by what looks like a cross. And we got different names for these dojis. The dragonfly doji looks like a dragonfly doji. The gravestone doji is always described as the warriors coming out of camp, going into battle, getting beaten back into camp, leaving the dead all over the field. That's the gravestone doji. Doji star is a small trading range with the doji, and the long-legged doji is a big, huge trading range that closes right at the same area. Spinning top, I put in the same category as a doji. Whoops, how did I do that? It just has a little bit bigger a body. It looks like a spinning top, but it still represents there is indecision between the bulls and the bears. Now, through the years, we've had the benefit of applying the T-line to our trades. And I use this chart to say, what is the T-line? The 8 exponential moving average. But the power or the powerful implication of the T-line is it's got Fibonacci characteristics. And the reason I say that is everybody has the 50-day and the 200-day and the 20-day moving averages on their charts. Nobody has the T-line. And there is a very high correlation between as soon as they do a candlestick buy signal to close above the T-line, that you can stay long until you see a candlestick sell signal and a close below the T-line. What time period using these 12 have been the most lasting and profitable moves? All of them, Jim. No matter what time frame you're trading, if you go back to the basic description of a candlestick signal, it's the accumulative knowledge of everybody buying and selling during a specific time frame. I used to trade the E-minis off a 1 minute, 3 minute, 12, or 1 minute, 3 minute, and 10 minute chart combination. Right now I trade futures during the middle part of the day, like soybeans, cattle, crude oil. I use the 10-minute chart and then drop down to the 5 minute and 1 minute. So they work on all time frames. If you're a day trader, use the 10-minute chart as your bellwether. How do you know when a doji is the start of a reversal or simply a pause in the trend? Usually a good indication is where are you as far as your stochastics? And again, it's made more simple by you see dojis, but you don't see a close below the T-line. Shows you the trend is not over yet. You use the exponential moving average for the 20. No. 20, 50, and 200 are all simple moving averages. That's because every major money manager around the world uses those moving averages to make their decisions. The benefit we have is we can see exactly what those decisions are at those levels. What time frame is the T-line? It's the 8 exponential moving average. You can use it on any chart. You could be looking at a 1-minute chart, a 10-minute chart, or a monthly chart. It doesn't matter. They're all going to look the same. Tulip bulbs, yes, works with tulip bulbs. Jamie, what's the psychology behind a dragonfly doji? I don't know if it's any different than anything else. They opened it at the top, traded it down, and came right back to the top and closed it there. Told you there's still indecision between the bulls and the bears. So again, when we add the T-line to our analysis, it makes it very simple. We can stay long until we see those sell signals and a close below the T-line. So that's the nice thing about candlestick signals. They have truisms. So anytime we can see a situation like a doji type day right here in the overbought condition, and this is probably the ABC of looking at a signal. Where is the signal occurring in the trend, meaning where are the stochastics, and what's the result after that signal? Reverse of gravestones doji, went to battle, left the other guys. I don't know, Jamie. It just looks like a dragonfly. That's all I got. So if we see that indecision up here in the overbought area, right at a major resistance level, and they gap it down, remember, there's a simple rule of the doji. They're usually going to move it in the direction how they open after the doji. That becomes even more critical or more important depending on where your stochastics are. So the obvious is, the simple rules that we know about analyzing the chart is, if we see a doji in the overbought condition, very simple rule, if it opens lower the next day, we're taking profits. And if you can add the factor that the further away you move from the T-line, the higher the probability it's going to come back and test it, just makes it that much more compelling that you should be taking profits up here. Now, as we go through training of other signals and patterns, obviously when it comes back here and does a J-hook, you can always buy it back. But why risk anticipating what it's going to do versus actually watching what it's going to do? The thing that always, I guess I was lazy, kept me from closing out a trade right away was, oh man, what if I'm wrong, or if I have to do it and then have to make another decision. I realized you can sell a position, and by the time you type it in and click it, it takes about 7 seconds. It takes you 7 seconds to buy it back if you want to. So essentially, if we use the common sense that is built into candlestick analysis, where the Japanese rice traders say, where do most people buy? They buy exuberantly at the top. And there's our doji. What's our simple rule of the doji? If they open it lower the next day, we're taking profits. Why would we be more comparative to take profits here? We're way up in the overbought area. A doji opens lower the next day, and look how far away we are from the T-line. So, and what causes exuberance at the top? You see it gap up in the overbought condition. Now, if it gapped up and opened here and closed here, yeah, they're still buying. Gaps up and it does a doji, that's a completely different story. That's telling you there's indecision up here. Get ready to take profits. There's a couple reasons. One, you're in the overbought area when they gapped it up, and just the gap up itself is your first alert. Second, look how far away you are from the T-line. It's probably coming back to test it. That's right, Rick. Yeah, I'm sure there's still. Yep, that was the tulip bulb craze. So, where are the dojis? Overbought condition. Is there any other factors that we can look at that we're starting to see indecision? Look where it's occurring, right here at this resistance level. Okay, you can ask any question you want. I use 1233 because I'm a swing trader. When I first learned candlesticks, the common one was 1455, but that was a little bit slow for what I wanted to use. So all I did was spent one night going back and seeing, all right, where's the top? What's the best numbers that I can put in here to get to the top? And after a couple hours of tweaking around, it came up with 1233. Jim, yes, Bitcom, and I would almost put Forex trading in that same category. Forex trading isn't anything more than trading currencies, and they've decided there'd be a better market or could have another whole market if they traded one currency against the other. What would a day trader use for stochastics? Still use the 1233, but use your 1 minute and 5 minute, 10-minute chart. And or when I was trading the E-minis on day trading, I'd use 1233 and 522. The 522 would give me the quick zags, and the 1233 a little bit longer. And then when the 522 and the 1233 coincided, I knew that was definitely time to either be buying or selling. Yeah, so don't worry about asking questions, Kay. This isn't, I always say, this isn't like little Johnny's Boy Scout troop, where they're hiking along one day and been hiking for hours, and little Johnny was asking question after question and just badgering the poor scoutmaster. So finally the scoutmaster said, all right, from now on, if you ask a question and you don't know the answer, then you have to do the dishes tonight when we get into camp. So they walked along for a few minutes in silence. And then from the back of the line, little Johnny piped up again and said, Scoutmaster, how does a chipmunk dig a hole in the ground and not leave all the dirt around the top? The Scoutmaster said, aha. And he goes, all right, you need to know the answer to that. And little Johnny said, he starts from the bottom. And the Scoutmaster said, how the heck does he start from the bottom? And little Johnny said, well, I think that's your question. So anyways, ask any question you want to. What is your setup? Do you only consider a candlestick, or do you consider any indicator with candlestick analysis? My first criteria is what are the signals doing? Then where's the stochastics? Then where are you as far as a resistance level? I can visually see what everybody else is probably watching. Is there a resistance level? How far away are we from moving averages? How far away are we from the T line? And it doesn't take that long to add all that into your analysis. It's almost instantaneous. That when I started seeing dojis here, I could see they were having trouble getting through this level. They were in the overbought area. Start looking for selling. The more compelling a signal is, the more likely you're going to see a reversal. The bigger the signal, the more indication there's been a change of investor sentiment. Get ready to take profits. So the doji tells you there's indecision at the top. And the Japanese rice traders have one very simple rule. If you see a doji at the top, close out the position immediately if they open it lower the next day. And there are times when you're in the overbought condition and they open it positive, just put your stop at where it opened the previous day because it came back down through that level, pretty much telling you that was the sell signals. So the same analysis can be done with dojis at the bottom. What we're looking for is either a gap down doji or a doji followed by a gap up. So anytime you start seeing dojis in the oversold area, that just pretty much tells you there's indecision going on. Get ready for that new decision. And if one doji means indecision, a series of doji means greater indecision. We're looking for which way they're taking that decision, which because we're in the oversold area, the probabilities are pretty strong it's going to be this way. So if I'm watching this and I start seeing them trading up on this day, I'm buying because it tells me they've made their decision. And then what do I want to see? I want to see if they close above the T line. After that, now you go into the rest of your simple trend analysis. This is what we call your best friend, a doji in the oversold area followed by a gap up. I'm also doing a series of videos that I've taken probably about the 12 or 14 signals and patterns and quantifying them, meaning putting them in order of the best ones on down. Now, that doesn't mean number 14 is the worst. It means those are the best out of all the signals and patterns you have out there that are probably going to be things that you want to learn. And the number one is the best friend. Anytime you see a doji in the oversold area followed by a gap up, that not only tells you that you're going to be in an uptrend, but you're usually going to be in a very strong uptrend. So it's very easy to get your entry strategy put into place, knowing that you're in the right place at the right time, and you start seeing a bunch of dojis. That's what we're looking for, is the confirmation. Do you use stochastics mainly to determine overbought and oversold conditions? Can you look at the slope of the stochastics to determine the momentum of the price action? No, stochastics are just a calculation of where you are. Obviously, you don't want to be buying a buy signal in the overbought condition. You don't want to be buying a sell or shorting a sell signal in the oversold area. What you're looking for is that buy signal in the oversold area and the sell signal in the overbought area. Are there going to be times where during the uptrend you're going to have signals? Yes, but remember, a signal is not a signal unless it's occurring at the right conditions of the trend. And this is all, Gord, this is all very simple stuff to realize. That once you start learning just a simple, this is what we call a slow curve breakout. How long do we stay long? Until we start seeing sell signals and we've moved that far away from the T line. Series of dojis, stochastics back in the oversold area. A gap up doji, best friend, breaking this downward trend channel. What's that tell you? We probably got a wave 1, wave 2, wave 3. So essentially what we're doing is just analyzing what happens with investor sentiment, which the reason we can analyze investor sentiment is because it works the same way time after time after time. Human nature does not change 400 years ago, today, or 400 years from now. A slow curve is, you can see how there's a slow curve. A fry pan bottom usually occurs at the bottom. A slow curve usually is much shorter, and notice how it's staying above the T line. And these are the breakouts that I usually make the biggest profits from, because when they break out of here, it's just like a slingshot effect. It's a very strong price move. So whether you're looking at dojis, series of dojis at the bottom, or series of doji at the top, that series of dojis tells you there's a change of investor sentiment coming. Anytime you see a, you consider bounty of Bollinger Band. I don't use Bollinger because the T line is a heck of a lot more effective. Now, that doesn't keep you from putting the Bollinger Band on there. Whatever works for you. The nice thing about candlestick analysis is we know it works or it wouldn't be around for 400 years. A lot of people don't know about it, not because it was hidden secrets of the Far East, blah, blah, blah. It's just because nobody ever paid attention to it. So when I started learning it, and sometimes it didn't work for me, I had to always step back and say, all right, if it didn't work, we wouldn't be looking at it today. So I just needed to learn how to use it correctly. Oops, hold on. Let me scroll up to a few of these questions. So the magnitude of the signal could be the length of the shadows as well as the body, like a shooting star doji. Yes, the bigger the signal, the more compelling there's been a change of investor sentiment. And as we go through some of these signals and patterns, again, the best friend is a very strong one. The kicker signal is the strong individual candlestick signal. Again, there's only 6 bullish, 6 bearish that you have to learn. It's not like you have to learn a whole slew. The important thing is knowing what patterns are setting up. Again, there's that slow curve breakout. There's your dojis, the close below the T line. Fine. Okay, we did the slow curve. Regarding doji following by a gap up, is the gap up candle a factor? Can it be a bearish candle? Bearish candle. If it's a gap up and then a dark candle, that's what we call the message. And I'll see if we've got one in here somewhere. But a gap up followed by a dark candle that is still trading much higher. Basically what's happened is it gapped up. People are taking profits, but the message was there was enough strength to gap it up. So all you do at that point is wait for the profit taking to end, which we can see based upon the next signal or formation. And then you start buying once the selling is over. The number one, yes, SS, the number one thing I look at is the candlestick. Where are we in the stochastics? and what is the overall trend. Now, there's going to be times, and tonight when people ask questions, we're going to be looking at charts that look like this, that have no trend to it. I'll just say I wouldn't touch this because there's no trend to it. I'm looking for the ones that have a strong trend situation. Sell in the oversold condition. That's overbought condition. Stochastics over 80. Yes, if you're up over 80, you start being a little bit more conscious of a candlestick sell signal. Buy in the overbought. No, that's backwards. Buy in the oversold. A buy signal in the oversold condition. Basically, the Japanese rice traders use very simple common sense. If you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong you're in an uptrend. If you see a candlestick sell signal in the overbought condition, probabilities are strong that you're starting a downtrend. You usually buy after one or two green candles after the doji in an oversold area to confirm, depending on where I am based upon stochastic, or the T line. Now, if I'm way, way below the T line and I see a reversal signal, at least I know if I start buying, my first target is probably up to the T line, which means if it fails at the T line, at least I'm getting out with at least a profit. Kicker signal, I will show you one later, Justin. Is left NAD right combo is a strong one? Yes, the left-right combo is, I've got ranked as a number 2. Does the best friend signal work as a bearish? Yes. Works just as well as a doji gap down as your bearish best friend signal. Sometimes there is a buy signal in the overbought condition. That is true based upon whether you're seeing a pattern versus, so I should probably qualify this. If you see a candlestick signal, buy signal in the oversold area, it's time to buy. If you see a candlestick buy signal in the overbought area that is confirming a pattern, it is time to buy. And we'll go through some of that. Steve, I don't know the answer to that. I don't know what they used other than they may not have used anything. When I first started learning candlesticks, I was reading books where the first part of the book was telling you how to set up your candlestick chart viewer, which was you build a box, put a piece of glass on the top, put a light or a candle underneath it, and then use your rice paper to draw your formations. That was, again, obviously well before computers. So I don't know what they did, and I think mostly they just looked to see how long the downtrend had been in progress. When stochastic's way up, look to sell. When way down, look to buy. Yes, that's kind of general. The kicker signal does not have to have any regards for stochastics. Kicker signal is so strong that it will work anywhere. All right, so let's see. I've only got a few more here. We're kind of going back to the basics. Here's kind of your, here's your left-right combo. That's a doji followed by a bullish engulfing signal. Or your bearish left-right combo, doji followed by a bearish engulfing signal. Anytime I see a doji, especially in the oversold area, somebody was just asking how many days do you want to, or how many formations after the signal do you want to start coming in? The answer is 0. If I see a long-legged doji right smack dab on the 200-day moving average, stochastics in the oversold area, and we wake up the next morning and the pre-market futures are positive, we're buying immediately because we know what would happen based upon the simple rule of doji. If it starts trading positive, it's moving positive. The doji, and here's a kicker signal, but this is what we call a flutter kicker signal. A kicker signal is where it opens here and closes here, dark candle. The next day they gap it up and create a big bullish candle. They gap it up at or above the previous day's open. A flutter kicker is they gap it up and do a doji. But we already have the warning that they've gapped it up. So number one, if you were short, you definitely covered your short. But what's our simple rule of a doji? Again, just pure common sense. If it opens positive after a doji, it's going to move positive. So even if you didn't get in here, you know to get ready to buy on positive trading or a positive open, because if it moves positive here, this is called a flutter kicker signal, because if you took out the little flutter, you basically have a very strong kicker signal set up. That's right. And you use the candle to light it up. Yep. Yes, Carol, when I'm buying, if I see something, and I'll show what we did today on EXAS, if the market is opening positive and the stock that we're looking at is opening positive, I say immediately, you'll probably be within the first 30 seconds to first 90 seconds. I just want to make sure it didn't open positive and immediately start selling off. Yes, Steve, I've got that one on here. So anytime you see a doji in a combination pattern or signal, this is your morning star signal. Big down day, a day of indecision, doji, followed by a third day that closes more than halfway up. And notice what else happened here, a gap up. That's usually telling you there's a very strong reversal. Again, if you have a doji in the signal or in the pattern, it's usually going to be more powerful than just a regular pattern. Again, the dojis, once they get up to a resistance level and you see that, and remember, the doji says indecision. If you see it right at the T-line /50, they traded lower, that told you they weren't going through, you still had more downside. It just gives you a much easier view, a left-right combo on a J-hook pattern. Or little morning star signal, J-hook. I always illustrate this one by just simply saying you always get price moves where you're buying at 15 and 2 days later selling at 40 out at 45. The answer is obviously no. But what it does do is it puts you in situations where the probabilities of being in something like that becomes very strong. So the doji in any trading entity, there's a doji sandwich. Doji sandwich is a bullish candle followed by a doji. Opens positive the next day. What's our rule of doji? It's going to move positive. So you've got another big candle. So you've got that little doji sandwiched in between. Or there's your left-right combo, confirming your J-hook pattern. Or there's your doji up here in the overbought area, getting ready for your sell signal, your evening star signal. So anytime you see a doji at an important technical level, like right now, crude oil, you should be short, because there's been a downtrending channel. When it got up to the 200, which also correlated with this downtrending channel, you saw a doji bearish confirmation back below the T-line. Where's the next likely target? Right back down to the bottom of this trend channel. So anyways, I just wanted to go through the signals again, because I guess I've skimmed over them, assuming that everybody knows the 12 major signals. So we're going to do some backtracking here, which means for people that are new to candlestick signals, we're going to just do a little introductory training session on June 17th. And it's not that extensive. It'll probably be 4 hours or so on a Saturday. And let me see. So if this is something you'd like to do, and again, for new people, once you understand the signals, the morning star isn't in the oversold area. Good anyways? Yes. Anytime you see a signal, depending on what the pattern is, it can still be bought. So anyways, we're just kind of, June 17th, we're going to be doing, for the people that need to get the basics in their head, because nothing else matters all that much if you don't have the ABCs in your head. Once you get that, now you can start adding all the other indicators to improve your trading. All right, let me shut down this projector and I'll bring up the live charts. All right. As you saw in the morning comments here for the last few days, it looked like we could be getting back into this sideways movement in the Dow. But if it stayed sideways, it's kind of be like a big fry pan bottom with this being the dimple area. But today changed that prognosis. With the Dow up that strong, now we're back into the J-hook pattern. Now look at what happened over the last few days. Where did the profit taking start? When they gapped it up, and then there was profit taking. But what was the, yes, June 17th will be recorded. What was the basic analysis of the selling? They couldn't close it below the T-line. Remember, yesterday they were trading down most of the day, but still brought it up above the T-line before the close. And same scenario for the NASDAQ. NASDAQ, if it closed down here, we would have had a bearish left-right combo. But when it closed back up, not only did it close up above the T-line, but it closed above the 3T line, kind of indicating that this upward trend channel is still in progress. So what we get visually is if we know that the signals are indecisive and they're not trading, reversing the trend, we can assume the trend is still in progress. So with that, now let me take a look at some of the other. If you're trading anything like the dollar, still trading the June dollar. So here's a situation where is the dollar tradable right now? Not really. There's really no trend to it. It's failed the T-line, but it's got a support level here. We're in the oversold area. So right now, it wouldn't be a buyer and it wouldn't be a seller, so you wouldn't trade this chart. Have you found any value on the 2-day EMA? Oh, it's not any different really than the 3 EMA. And I don't say I didn't find any value. I just never have used it. Now, again, back to I think what I started to say and forgot to end the thought was you can put anything you want to test on your chart. The basis of the chart, though, is the candlestick signals. We know they work extremely well. So anytime you add something on here to see if it would improve the probabilities of what the charts are telling you, you keep it. If it doesn't, you take it right back off. As you can see, these charts aren't very, messed up or have a lot of indicators on them. My late friend Dave Elliott from Wall Street Teachers, every time I looked at his chart, he had so many things on there, so many lines and moving averages. I kept telling him I get hungry when I look at his charts because it looks like a big spaghetti bowl. But I try to keep everything as simple as possible. The number one criteria, again, is the signal itself and where is it occurring. So, for example, we made lots of profits on this June cattle on this move. Nothing here except today, as you can see, after a bullish Arami, come back up through the T-line, right back to the resistance level. If it opened positive today, we were buying, which we did. Let's see. Can you review again whether a close, a position, or hold until end of day when it falls well below the T-line during the day? Yeah, let's see. John, that's also a function of where are we in the market. And I've got a few charts on here that I'll show those examples. A stop loss should be placed at prior day's low if in the overbought area and T-line, or yeah, not necessarily low, I usually use the open. So if I was up here in the overbought condition, as you can see, they were taking this up the limit each day. In the open positive, I'd have my stop at the previous day's open. Same thing. I've opened up here. I have my stop at the previous day's open. So the nice thing, again, about candlestick signals is that, like all investment teachers, they say cut your losses short and let your profits run. But very rarely do you hear them tell you how to cut your losses short and let your profits run. There's very simple techniques for stop losses using candlesticks. Again, all built on common sense. Do you hold live cattle and other similars overnight? Yes. I'm buying the trend. So if I'm buying based on a candlestick buy signal, I'm selling when I see a candlestick sell signal and or a close below the T line. Yeah, they go in the barn. Okay. Do you ever place trades only using price action and your expertise in candlesticks? Always place trades on the price action. A lot of people say, well, do you use volume? No, volume doesn't have anything to do with price. If a stock is going up and there's very low volume, that means people aren't willing to sell and a lot of people are willing to buy. Now, I do use volume on days where you might have a reversal and there's a big volume spike. That means there's been a major change of ownership. But, so the question is, do I ever place trades only using price action and your expertise in candlesticks? The candlesticks are the information we're looking for. That is the accumulative knowledge of everybody buying and selling during that particular time frame. So the question is, do you use any fundamental analysis? No. What I'm looking at is all the people that probably have a lot more expertise in fundamental analysis than I have. I'm watching to see what they're doing, whether they're buying or selling. I don't have to know what the fundamentals are. I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Let's see. We're also short July soybeans. Notice what happened right here. A big evening star signal. Even though we're not in the overbought area, look where it occurred. Right smack dab at the 50. What'd that tell you? Everybody that was watching the 50 saw that wasn't going through, they were selling. We shorted right here. Now we've moved our stop down to today's high because logic says if we see dojis in the oversold area, we don't want to see it trade back up through that level. If it keeps trading down, we'll pick another spot to cover our short position. What else do I have? Crude oil, which let's see. Crude oil, let me make this a little bit smaller. This is where I say observe the obvious. The obvious is you're in a downtrending channel. Good prospect that you're coming back down into this area. So will it get there? Who knows? But at least I know that's the target. As long as I don't see a reversal signal and a close above the T line, stochastic still heading down, tells me my probabilities are pretty strong we're still heading in that direction. And again, notice what happened in today's trading. Doji type day, but the stochastics are still heading down, and it opened lower this evening. This is after hours trading. It means there's a good probability they're still heading down. So that does two things. If you're trading crude oil, you can be shorting crude oil. If you're looking to buy drilling companies or oil companies, yeah, you might be a little bit more hesitant if crude oil is affecting those prices. All right, let's take a look at, let me do the biggies first. Amazon has been a nice steady eddy, means had one day where it closed below the T line. Now, Somebody asked earlier, do you close if it, how do you know whether to close it? Trading below the T line? Well, if you closed it on that day, you bought it back here, because what's our simple rule? As long as it stays above the T line, you're in an uptrend. If you didn't close it that day, which you might be a little bit more hesitant to do, because notice what's happened during the last 3 months, 4 months, 2 months anyways. It's been trading above the T line. So if it closes right here, very simple. It has to open positive and trade positive to stay in it. If it opened lower on that day, you close out the position. NVIDIA is another one that we've been trading fairly successfully in the options room. This is a very simple rule. There's your best friend signal. Now you have a 45-degree. That's just kind of a steady uptrend. And what's our simple rule of a 45-degree? You just stay long until you see a candlestick sell signal and a close below the T line. Netflix. Kind of the same scenario. You closed it out on this day, you were buying back here, and notice what it's doing. Little J-hook pattern that's telling you they're using the T line as support. You're still in a 45-degree. The gold stocks obviously aren't doing well, so this is nugget. So you can decide, well, do I want to be trading gold stocks right now? Well, the ETF is moving basically sideways, not going anywhere. I want to go find an industry or a sector that's looking more like this and go after those stocks. So this basically allows you to put all the stars in alignment. You want to be finding sectors or stocks that are moving in the right direction. And if they go dead, you move out and move on to something else. Apple, nothing, no direction. Now down here, look, we had a little gap up and had a good profitable move until it got here. So right now, not trading Apple. And Tesla, notice where it broke out. There's your bullish Arami. And this is another thing that we kind of illustrate to people. Had a nice buy signal, a bullish Arami, and a lot of people say, where do you grab for the fallen knife? That's always the rhetorical question. With candlesticks, you can see where with a signal where the selling has stopped. And anytime you see there's a resistance level and they gap it up to get to that level, that means they're going through. They have no more regard for that resistance level. Stochastics are 12.33. Lewis, it doesn't matter the time frame. I usually use a chart about this big because I'm more interested in what's going on over here, and then maybe look back over here. So my important criteria is what's happening right now, and then I can go back and see what type of patterns it's coming from. So if the trade's below the T line during the day, it is a uptrend until end of day. But if it's in a downtrend, close position, maybe put a buy stop at the T line. Well, yeah, if you're in an uptrend, I usually give it, and it's been a sustained uptrend, I'll give it one more day. But it has to open positive and trade positive. So something like this, if I saw it close just below the T line, it had to open positive and trade positive. If it opened lower the next day, I close out the position. The black color is the T line, yes, the 8 exponential moving average. The blue is the 50-day, the gray is the 20, and the red is the 200 all simple moving averages. Again, this is not rocket science. The great benefit of seeing the graphics of candlesticks is it tells us exactly what decisions are being made at important technical levels. So my number one criteria is the signal, and then you can apply any other technical indicator you want to. Whoops. Which might be, if you see a strong uptrend and it's reversing, you might flip your Fibonacci numbers on there. Anything else that you can put on there that you think everybody else is watching. So some of the stocks, for example, let's see, somebody was asking, here is a kicker signal. It opened here and closed here. The next day they gapped it up and went the opposite direction. So anytime you see a gap up above the previous day's open and go the opposite direction, that's a kicker signal. That's your strongest individual candlestick signal. And so that's why we are buying today. On yesterday, we had that gap up, and look where it closed, right here, after a gap up little kicker type signal. What did it tell us? If it opened positive, what did it tell us about the resistance level? It's not there anymore. What's it tell us about the strength of a kicker signal? It's probably got a lot more upside. So very simple. If this was a 7-point move, you can kind of estimate that we're heading up into 10-point move. We're heading up pretty close to the $45 area, which meant we are buying both the stock and the calls on the open today because we had a high probability it was going to continue because of the kicker signal, J-hook pattern, new wave 3 kicker signal. So in the options room, we're still long AME. Ever since the Doji gap up, your best friend, breaking this level, how long do we hold this? As long as we don't see a sell signal. I'm going to close below the T line. Tim, you're going to have to write down which one. Oh, if you're... oh, no, Fibonacci is just something that if you saw a pullback, you don't have to use it. Let's see if I can do this correctly. If I wanted to see how far this pullback was going to be, I could throw a Fibonacci retracement on here just to see that if it hit here and started back up, then and saw a buy signal here, then I know that everybody that was watching the 38% retracement was buying, or the 50. So I'm not using it to make a decision. I'm using it to confirm if it pulled back and bounced off of there, why it was why it was reversing at that level. Yeah, you could still be buying this one with the expectation wave 1, fry pan bottom type pattern going into wave 3, hopefully the same magnitude as this right here. Once again, notice how this broke out. Broke out with, there's our inverted hammer, one of the 12 major signals, and one of your highest percentage signals. Unofficially, over the last, I forget, 40 years of trading now, anytime you see an inverted hammer and they open up positive the next day, you probably have a 95% probability or greater that you're going to start moving higher. When it broke out, look how it broke out with a Doji sandwich. And what do we know about a Doji sandwich? That there's usually going to be more upside. What you have 2 green lines. Oh, this may be a gray line. That's the 20. We started buying BBRY down here. And this is what we call the message. Somebody was asking earlier, what happens if it gaps up and sells off? What we do is we wait till the selling is done and then start buying, because what was this message? Somebody was trying to get into this with great enthusiasm. Right now, somebody was asking, did you close out the position yesterday with it trading below the T line? I closed out some. I was going to come back and close out more because I was closing out a few other trades. But by that time, it was showing it wasn't trading indecisively. So I just gave it one more day with the same idea that if it opened lower today, you close it out. Do they all bounce back up? Nah. It's still in a strong uptrend. Oh, let's see. We bought APTI. So here's the absolute reason why you use the T-line. This is what we call the classic. There's your fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. What do we expect after a strong price move? Profit taking. Here's our J-hook pattern. What's our prerequisite for a J-hook pattern? A strong price move. So that's why we call this the classic. Fry pan bottom, strong price move, J-hook pattern. How long do we hold this? until you see a sell signal and a close below the T line. With the caveat, where do most people buy? They start buying exuberantly at the top. So now we're starting to see a big price move, moving away from the T line. We start watching a little bit more diligently to see whether it's time to take profits on the next. You can be buying this one. Obviously, it would be better off buying it at down in this area, but now you have a little what we call the scoop pattern. Flat handle, scoop. If it opens positive, yes, you can be buying. And how long do you stay in it? As long as it stays above the T line. So it's not too late. It's just probably not one of your best entry points at this time. We recommended XENT the other day because of the same scenario. Fry pan bottom breakout, J-hook pattern. Notice your little morning star signal. Notice your Doji sandwich that took you right up to the resistance level. You can still be buying this one with the expectation that your next move is going to be this magnitude. So this type of chart is something that's very useful when we're in the options room, because if we know what the next price move is going to be, depending on the amount of time we have left to expiration, we can maybe be much better off doing a spread versus just buying calls outright. I can't for some reason get the Forex trades on this chart. I don't know why. But if you that's the whole point of all this. If you see a J-hook pattern and you can see why it's basing, yes, you can be buying. We're looking at this one. This is Build-A-Bear. Failed up here, but notice it's trying to do the cup and handle. So you get ready to buy, especially if this is what we call the bobble. When it hits a resistance level, comes back down, the T-line acts as support. If it comes back up through the resistance level, that's when you start buying, because that's a more defined J-hook pattern. When you see the kicker signal on daily, you know you're looking to buy soon after the open, but what is the time frame you go to then when the signal for an exact entry? I will flip to my 10-minute chart and see what the 10-minute chart looks like. Let me do this. That's why we got into live cattle today on that basis, is when it opened positive and we knew it was breaking out, then you just flip to your 10-minute chart. And the 10-minute chart was looking like this. Now, is this a safe place to buy? Well, we could be buying here on the 10-minute chart because there isn't any selling, and our daily chart says if it breaks out through this level, we're probably trading higher. So that doesn't mean that buying here might not see it reverse sometime in the day. It just tells you it's kind of confirming the daily chart that at least it's safe to be buying at this point. Is trade like Chuck for real? I don't know. He must be doing something. He's advertising all over the Pittsburgh, and I've checked. Just a good guy. He's a straight shooter. Do you know how many periods does price stay above or below the T line on average? I have no idea. It doesn't matter. All you do is you stay long until you see a sell signal and a close below the T line. That's the 10-minute chart. All you do is stay long until you see a sell signal, or start seeing a sell signal too far away from the T line. No particular time frame. Could we use only the 3 EMA? Yeah, you could. You just get a better view. I mean, it's not like you're cluttering up your chart having the major moving averages everybody else is watching. Julie, in our options room, which is we set it up because we didn't want to have the terminology for option trading and futures trading, which is where we do both, in the regular room, because there's a lot of people still learning how to trade using Candlestick Signals, we didn't want to have another whole vocabulary of option trading. So we made a separate room. There's usually about 25, I guess we had as high as 50 people in this past week. But we've got some very good traders in there. And so it has two functions. One, people can discuss what would be the best option trade based upon the pattern that is setting up. And two, we've got people like Nora and Don M that are very willing to share what trades they're doing and why based upon the signals. And they'll tell you what strike prices they're doing or whether they're doing a spread. So it's a double function. One, you learn quite a bit about the different strategies, and two, you get a lot of good ideas in there. As a matter of fact, I was buying EXAS today because I asked Nora yesterday what she was buying, and she said EXAS. And so I said, yeah, if this opens positive, I'm going to be buying it the next day. What indicators, Sam? This chart could be a 1-minute chart, a 10-minute chart, a daily chart, a monthly chart. The charts look all exactly the same. As you saw when we just did the live cattle, this is my analysis on the daily chart of live cattle. If it broke out to this level, it's going to be buying. When was it time to buy? I went to my 10-minute chart. Look how it came out of a fry pan bottom. So I was buying right up in here and had a good day because it went up a limit. Yeah, Don M and Nora are just members of the chat room. They've been there for a long time. What is the green candle? That's the 3 EMA, which has a function that the further away you move from the T line, the more effective the 3 T line becomes. Okay, I'm getting way off track here. Let's see, did I do all the ones? Done in, let me go to a few. We also have been in PLSE. Look what it did. It did a morning star signal, which usually indicates that there's going to be more upside. Labu, same scenario. Big morning star signal. Notice where it did right off the 200, then a doji, then a bullish confirmation. Now your strategy becomes, what's the next resistance level? So if you're buying, you just be a little bit more cautious of what happens here or here. If it breaks out through there, then we know we're probably heading back up to this resistance level. Do you use, what do you use? Pick the stock trade. What do you use? I usually, I put out 2 or 3 stock picks every night. Not so that people have stock picks, but you can look at the video and see what the rationale was for buying it. So it's still a constant learning process. And I will use the quantitative analysis of which stocks right now have the strongest reversal signals. AFSI, there's that little morning star signal after a best friend signal. This one can still be bought with the anticipation that it's going to come up to the 50, and if it breaks through the 50, now you've got kind of a scoop pattern breakout. So I'm looking at everything that I know improves the probabilities based upon what the patterns and the signals are telling us. NVCR, again, a left-right combo right here on the T line, telling us that this 45 degree is still in progress. Kara, also did a little Doji, bullish engulfing. First target right here. If it breaks through there, we're still looking for it to get up to the recent highs. My voice is a little distant. All right. Many people would like it to be that way. Guild, remember, candlestick signals were developed on the most basic of all commodities in the world, rice. And the Japanese rice traders that made money from it didn't become wealthy. They became legendarily wealthy. And it's all from one simple aspect, that human emotions work the same way. So, yeah, you usually get a little bit steadier moves in commodities. Okay, let me see what we got here now. Try to get through some of these. Oh, Con was another one that we recommended a few days ago because of the Doji gap up. And notice what it did today. There's your bullish Doji sandwich. And what do we know about a bullish Doji sandwich? The probabilities are pretty strong there's going to be more upside. And if there's more upside, what's that tell us about this resistance level? That we can still be buying on positive trading from here, which means after this gap up, we had wave one. Where was the time to start looking to take profits? When they gapped it up in the overbought condition. That was the time to start taking profits. We could always get back in here, or when it came back down where the stochastics were back in the oversold area and we did another gap up, that was the time to be buying. I'd still be a buyer of this one if it breaks out into new territory. Light is another one that we've been trading options on ever since this gap up off the 200. You stay long. Notice the one thing that this stock hasn't done since the gap up. They really haven't closed it. They closed it one day just below the T line. The next day they closed it back up above the T line. Now it looks like it's got the potential of breaking out. So these are the type of things where you can buy calls and make big money with a high degree of probability, just because you know which way the price move has a probability. There's a Morningstar signal off the 50. Another one that you could be buying on positive trading tomorrow, confirming the Morningstar signal, the fact that it's coming up through the T line, and got a little scoop type pattern set up. Whoops, I've kept everybody way over time. BKD, another Morningstar signal. Again, these all have dojis involved. Anytime you see a doji and a pattern, it's going to give you, this is QTM, another one that can be bought on positive trading tomorrow. And we watched, this is one thing that we've learned or teach people. When they gapped this down the other day, it was on a downgrade, which didn't do anything at all as far as changing the investor sentiment. Supply and demand that one day, and it's moving right back up. So where is it now? It's back up above the T line. Yeah, usually RC, I will put out, when I'm making an option trade, you should be getting in your email. So when I put out an option trade, I copy and paste it into the options room, and then Abe sends it out to everybody. Let's see. Couple real good looking charts. There's a Morningstar signal on SSQ. That's a shipping company. So this is very simple logic. If you see a lot of stocks, there's a Morningstar signal in TK Corporation. If you see a sector that's starting to see a lot of signals, we did AFSI, Morningstar signal, ACHC, big Morningstar signal. Another little simple rule of candlesticks, the bigger the signal, the more compelling that there's been a change of investor sentiment. PBYI, little Morningstar signal, J-hook pattern. Look where this came from, out of this little fry pan bottom breakout. This is what we're looking for, is the breakouts. And the reason that we're looking for the breakouts is if we know what the pattern is, a lot of people say, oh, shoot, I don't want to, if you're not receiving the emails, send a message to Abraham and tell him that you need to be getting the option trading email information. Fitbit, another one that if it comes up through after the hammer signal, stochastics coming up, If it comes up through the 50, you can be buying with a first target up here at the top of the channel. ALNY, Morningstar signal off the 20. J-hook pattern coming out of a fry pan bottom. That's your classic. That one can be bought. GPRE, big Morningstar signal. These are all putting situations or putting, so if I'm looking for trades, I'm looking for the ones that have the highest probabilities of moving in the right direction. Notice how this one broke out today based upon this little scoop pattern. So a very simple trading technique is yesterday, if you're watching this one and you're right at the breakout level, you start buying some of the calls or you buy the stock. What's the worst case scenario? They open it lower, trade back below the T line, fail at this level, you close out with a small loss. What was the one you did earlier first? Oh, I don't remember. There was a bunch of them. IPXL, little scoop type pattern, very simple. This is a bobble setup. If it opens positive, coming back through the resistance level, you want to be buying immediately. More than likely, you're going to see that on the recommended list tomorrow. And QTNA, another little scoop pattern. Notice the series of dojis here, and then they told you which way they're going. If they break out through this handle, you got a slingshot effect to the upside. Oh, I can't remember which one it was. AFSI. Whoops, AFSI. Oh, that was a one. It had a big, oh boy. Was it PBYI? No. ALNY. That was a decent sized one. I can't remember which one it was. And IONS, they gap this up. That's your kind of your little J-hook pattern. So if this is wave one, wave three should take you out up here, which means they're breaking this level. There's a gap to fill up here. So again, just puts you in a high probability situation. No, EXAS was one that was coming off the kicker signal, breaking through this level. Wave one, wave two, high probability wave three will take you to $45. Okay, so I guess that's about all I got tonight. Are there any general questions on candlesticks before we start looking at everybody's charts? And try to keep your requests down to 2 tonight since we are over time. If not, Jim, go ahead and do the double line. Yes, Pam, I think there's a way to get a recording of this. I don't know. Jim, you didn't do the double line. All right, in 4.8 seconds, do the second double line. Okay, Home Depot is one of those that's not very lively. I mean, just because of the percentage move. It did a bullish engulfing here. You can be buying this one. You're just not going to make a whole heck of a lot of money. So obviously, this is more of a option trade setup. So I'd be buying calls on positive trading tomorrow. Ford gapped up through the 50. And notice how, once again, after using the T-line as support a couple of times, remember, nobody has the T-line on their chart. This is kind of a natural support. So if you see that natural support, it tells you they're not selling it off. There's usually a lot more upside to come. COL, stay long, but obviously you don't want to see this. If it opens lower after a bearish harami in the overbought area, it means they're probably at least coming back to test the T-line. You might take profits and get back in. Parker Hannafin, nothing. Which direction is this going? Absolutely flat. Worst case scenario is you're in a fry pan bottom, which means if this is the dimple, This move here is going to be the same as this move here, so it's still a few days away from really breaking out at all. Caterpillar, again, another one that's not a real lively one to trade, so more of an option trade. But notice where the dojis are occurring, right at the same level it topped out before. Makes this very simple. If they start trading this lower, you want to take profits because that means they failed up here. That's what the dojis are telling you. First Solar. Just stay long, as long as it doesn't close below the T-line. The Russell 2000 starting to come back up. Not doing anything real wildly exciting just yet, but it's telling us we're still moving in the right direction. So as long as things are moving in the right direction, that gives you much more opportunity to take advantage of the patterns that are in breakout mode because they're going to be the big movers. FEYE, a little Morningstar type signal. You can buy this one on positive trading also. Blue, nothing here. Notice that today was not a reversal signal, just an up day. If you were short, I would have covered the short position on the close, but I wouldn't be going long. PSTG, stay long. There's your bobble type pattern. Hit the resistant hanging man, sold off, went to the selling to stop, bullish harami. When they broke through, that told us we were in the next wave to the upside. UPS, nothing wildly exciting about this one. First of all, sideways. The percentage move is very, very low. If you like it, you can stay long. You just obviously watch to see what happens once it gets to the 200. FedEx, little breakout. Again, another institutional trader. Let's make it a bit smaller. I'd be more, if you're long, you stay long, but you definitely want to see it get through this resistance level. This Tractor Supply. You can start buying this one. But here's where you observe the obvious. The obvious is you're in a downtrend. So that usually means anytime you hit a resistance level, it could be the 20 or it could be the 50, watch to see what type of signals you have there. You're more apt to see people taking profits at those levels and continuing the downtrend. L brands, you can be buying this one, especially if it breaks out. You can see kind of the slow curve to the upside. Whoops, I went way past. Palo, stay long. Best friend, big island reversal. More than likely, they're going to come back up and fill this gap. But an island reversal tells you there's a strong uptrend at that point. Corning. Oh, I should mention this. We're going to be doing again, the private training session at Cuca Lake this summer. We've got only 4 or 5 spots in each session. But for those that are bringing spouses, Sandy takes them down to the Corning Glassworks for an afternoon, and they blow ornaments to the Christmas tree and that sort of thing using the glass. So that's just something that keeps everybody occupied. But Corning, not real wildly exciting. As long as it stays above the T-line, you can stay with it. Probably wouldn't be owning it here. INFN has a choppy breakout situation, but it started with the kicker signal, then backed off, and then today it did somewhat of the kicker signal again, which kept this trajectory in line or in progress. If it breaks through this level, you want to be buying. That's we've got a big Morningstar signal, got a kicker signal, got a kicker signal. Stochastic still not near the oversold area. Look for a breakout of this one. Zillow, just stay long. Be ready to buy this one on positive trading. Wave 1, wave 2. Notice your little Morningstar signal with the inverted hammer. Now you're breaking out. I'd be a buyer on positive trading on this one. BYD. Also, all you can do is stay long. Notice your kicker signal again, then your 45 degree, which tells you stay long as it doesn't close back below the T line. EQIX. This one you get ready to close out. You've had a bearish engulfing signal. Now you've got a bearish left-right combo. If it opens lower tomorrow, close out the position. Toll Brothers. Nothing wildly exciting here. You do have a bullish engulfing. If you like it, you can be buying it. It's just not going to be a big price mover. JP Morgan, the financials were getting beat up. It did a bullish harami today, which tells me if I was short and it opened positive tomorrow, I'd close out the short position. Goldman, same scenario. Notice where it did a bullish harami, right smack dab on the 200. Means if it opens positive tomorrow, you close out any short positions. And Sienna, big breakout. Look for a 45 degree to come off of here. GE is probably one of your boring stocks to trade because of the lack of percentage move. If you like it, you can be buying it. You're just not going to make a whole lot of money because of the institutional trading. And American Airlines, just stay long as it stays above the T line. Micron. Oh, I didn't answer Jim on Toll Brothers. Yeah, you can go long. It's just not one of the best charts I'd see. You're seeing a little bit of consolidation up here, but this is what we call a double doji setup. If it opens positive, you buy immediately because that means the consolidation was very indecisive. EXTR, nothing to do here except stay long. Use the T line as your stop. CVRR, nothing. JB, I'm anticipating you're in that and you just don't want to get out of it. IBB, same as Labu. You can buy this one if it comes up through the 50 tomorrow. And REGN, J-hook type pattern. You can buy this one on positive trading tomorrow. Is there any way to get the recording before the start in the AM? Oh, Jim, you'll have to talk to Jim about that. Wayfair, another one that you can be buying on positive trading, looking like it's going into the next wave. Herbalife, same scenario, slow curve. You can buy this one also on positive trading. Apple, not trading it right now. Just no direction to it. Wouldn't be long or short Apple at this point. AMP, Morningstar Signal. You can buy this one. You just be aware that the 50-day moving average is probably your likely resistance level, so you just see what it does. When I say you see what it does, you'll see what type of signal occurs at those levels to tell you whether to close out or whether it's going to go through. Team, another J-hook pattern. There's your classic fry pan bottom J-hook pattern. You can be buying this one. VMW, nothing wildly exciting here other than you're in a very slow uptrend. If you like it, you can stay long. Again, one of those that you're not going to make a whole heck of a lot of money with, but you're moving in the right direction. Lulu, nothing here yet either. If you were short, I would have covered the short positions, but I wouldn't be going long just yet. Goodyear gap up. If it opens positive, look for a 45 degree. Again, you got to watch this, make sure it breaks through this resistance level. Let's see, we did those, Caterpillar and First Solar. Let's see, dang this thing. What am I keep doing that for? Let's see, we did Netflix. Netflix is, you stay long on this as long as that 45-degree, son of a gun. I'm the type that doesn't like to make the same mistake 7 times. Just as long as it stays above the T line, the 45 degree is still in progress. IRBT, oh boy. This one, if you stayed long, it has to open positive and trade positive. If it opens lower tomorrow, close it out. It's lost its luster. And there's the big morning star signal on Labu. You could be buying this one on strength. Oh, let's see. Oh, I can do it over here. November or July. Cocoa. And not a great chart. Now, again, look at the double doji setup. This is very simple. If it opens positive tomorrow, you can be buying immediately because you're going to get that same magnitude, which means you're breaking out through this level. So you can buy this one on positive trading. And I don't know how to get soybean. Now, let's see. S. I don't know how to get beans over here because I never trade them. Dan was a auto parts moving nicely. Wave 1, wave 2, going into wave 3. Notice the Doji sandwich breakout. Again, the Doji sandwich told us that this day was probably going to be about the same magnitude as this day, which meant it was breaking through here. And what do we know about the Doji sandwich? There's going to be more upside. Oh, I'm sorry. I'm thinking of bean oil. Oh, I don't know how to get bean oil, but still trading. We're still short soybeans. And again, we got our stop up here. So I imagine soybean oil must be heading lower. The first session, if we get it filled up, will be August 5th to the August 8th, which is, I think, Saturday. You come in Saturday evening. We do Sunday, Monday, and half of Tuesday, and everybody goes home Tuesday. And then the second session, maybe coming in Tuesday night, we do Wednesday, Thursday, and half of Friday. Just to give, they're expensive, but you don't have to worry about room. Everybody stays right there at the house. It's nice, clean, modern house. You're sharing bathrooms. You don't have to worry about food. You probably will have more food than you can handle. We go to nice restaurants along the lake. We have lunch at the wineries up on the hill. Take a break. And Andy always has stuff ready for us. And we usually have snacks and hors d'oeuvres sitting out on the deck overlooking the lake when we're taking a break. So you don't have to worry about food, lodging. All you have to do is bring your flip-flops, your bathing suit, and if you want to, bring your laptop. There's another Morningstar signal on the spiders or for the biotechs. Same thing. You can buy this one on positive trading. Show how you measure a wave. Let's see. A wave is usually wave 1 and wave 3 are about the same. Try to think. Let's see. I can remember this one. So if this is wave 1, which is approximately 10 points, and I'm calculating this one's going to be approximately 10 points. Does it bother you to carry too many positions over a weekend? Carol, no. the fear factor is that something major is going to happen over the weekend, I would say in the last 40 years, it's probably happened maybe 3 or 4. I'm not going to base my getting out of positions over a weekend for the fear that something might happen, which usually doesn't. With a kicker signal, is it too aggressive to get in as the second leg is forming, or is it key to wait for the second leg to close? No. If I see a kicker signal, which is the benefit of the chat room, that if somebody said, oh, look at EXAS, it's gapped up, and I can look and see that they're trading it up from this, I'm buying immediately. Because I know the probabilities are going to be pretty strong, extremely strong, that not only will there be an uptrend, but there'll be a strong uptrend. Why wasn't Toll Brothers exciting? Because you can see what the price movement has been, especially over the last 3 months. It's moved from, at best, $35 to $37, $38. Yeah, just not very intriguing. There's too many other places. And again, this is the benefit of candlestick analysis also, is with very simple scans at night, in less than 20 minutes, for somebody that doesn't know what they're doing, you're going to find 4, 5, 6, 7, 10, 12 excellent chart setups, which does 2 things for you. It gives you a supply of trades constantly. And the supply is going to be so big that now you start cultivating to see which ones are the best ones to be in. And if that one doesn't work, you've always got another one to go to that you've analyzed the night before, a bunch to go to. ROIC, not anything real spectacular. Again, it would have to move from here to here to make a 10% return. So I take it this must be have a good dividend yield. If you like it, you can be buying it, but I would hope it's paying you a good dividend. As a trader, it's just not worth. There's much better places to have your money. Tech, nothing here. You can see that there's no movement. If you were short, if it opens positive tomorrow, you cover your short because that tells you you're still in this sideways mode. Oh, I keep flipping. Did you cover AXTA? Good little breakout, but it still needs to break above this level because as you can see, every time it's gotten to this level, they've sold it off. So you can buy it on strength. It just needs to stay up above that level. Sotheby's. All you can do here is stay long. Anytime you see a fry pan bottom, well, shuzbutz, what's happening here? Big fry pan bottom, you have one simple rule. You stay long as you don't see a sell signal and a close back below the T-line. Yak, you stay long. It's in a 45 degree. For safety factor, I'd be putting my stop at today's open. We did ROIC, SPI. This is kind of a funky one. It's done kind of a bobble pattern. If you're long, it better stay above the 200. If you're thinking of going long, I'd probably be more apt to buy it once it came back up through today's open, telling me that they're still very strong on it. But right now, it's kind of whipsawy. Dang, how do I do this? I keep scrolling and it just pops all around. NGR. Okay, Lulu zoomed. Yeah, I can't tell off of this chart. There's a J-hook pattern setting up. You can buy this one. Obviously, watch to see what happens once it gets to the 50. Tesla, you stay long. At this point, getting up in the overbought area, put your stop at today's low. It shouldn't come back down through there. Up $8. All right, thanks, Marshall. ATSG. This one, that would be a toughie. I probably would have closed it out with it trading much lower. You can always buy it back. If I was going to buy it back, it would probably be above the $24 level. Want to see it break out. But this is kind of a belt hold signal, which pretty much tells you they wiped out a lot of sellers. DLB, Doji, nothing of any great interest on this one. Something is going terribly wrong here. What's happening? Something's happening. Huh. Well. This is enough to make you kick your grandmother. Can't remove this study. It looks like it. Nothing here to get real wild and excited about anything. There's really no major reversal signal. This Hewlett. Another one that doesn't have any big move to it. You can be buying this one. Obviously, you want to see it break out through this level, but if you should be expecting it to come back up to this level, getting right back into the trend channel again. Microsoft, I never trade this one because this is one of the slow movers. If you like it, you stay long. I wouldn't trade it. It'd be more of a long-term hold. A Doji sandwich. Trying to think of which one is a Doji sandwich. A Doji sandwich is a big green candle. Then it's followed by a doji. And we know the simple rule of the doji. If it opens positive the next day, it's going to trade positive. And usually it will trade, that candle will be the same size as the candle prior to the doji, with the doji sandwiched in between. And then the doji sandwich is usually a very strong pattern to tell you there's going to be more upside. You use Metastock? Yes, that's my system in the in Metastock. Let's see. How do I scroll? Let's see. Well, for crying out loud. That's probably what was goofing up the... Well, this is... AGRX. You can be buying this one. You want to see it break out